How's it going, everyone? This video is going to be over my A+ ICT entry checklist. Once I have a daily bias or direction, I will use this checklist to make sure all requirements are met before I take an entry. Let's take a look into the checklist and then we will go into some examples. With this checklist, I focus on a few things. We'll go through them in order. The first thing I focus on is a stop raid. This just means that a low was put in before it was rated or broken. The next thing I look for is a market structure shift or displacement. This means that a previous high was broken and aggressively moved over. The next thing I look for is where there is a little bit of flexibility. I generally like to see price move back into a discount of this price range here. The next thing I look for is some sort of PD array here. Generally, I prefer to have a fair value gap or an order block, but I will also use an OTE in this area, as well as a breaker block. I know this got a little bit messy, so let me expand it out and show each different one. Each one of these concepts could be used as an entry model by themselves. However, I like to blend 1, 2, or 3 of these concepts together for my personal strategy. For example, I will look for a fair value gap in an optimal trade entry, or I'll look for the box setup in an optimal trade entry. There are many different ways to blend these concepts. I just do what catches my eye the most. Let's get into some examples where I will show each one of these individually or blended together. For this first example, we are going to look at NASDAQ on the 15-minute chart and watch the price action as we reach this daily fair value gap fill below. So as we let this play out, the first thing we want to notice is that we have sell side liquidity resting right here. As price moves into that level, you can see we get a nice reaction out of it. However, have we shifted structure yet? No. With this next candle, we have shifted structure. So we have that sell side liquidity or stop rate, our shift in structure. Now I'm going to be looking for an entry model. So going through each concept individually, the first one we have is discount and premium. So ideally, with this displacement range, I'm not looking to long above this 0.5. I'd want to be longing this green section down here. Taking that one step further by using an OTE, I can see that this is our premium up here where I do not want to be longing, and this narrows down my discount range to my OTE right in here. The next thing I could look for is a fair value gap, which we have a very small one right here, as well as an order block, which would be this down close candle right here. And then breaker block would be these up close candles here before the raid on liquidity. And lastly, for the box setup, I would be looking for price to reach into this area here. As you can see, all these concepts presented themselves. How do I choose where I take an entry? And this comes down to risk to reward and what catches my eye. I know that as I move my entry closer to my stop loss, my risk to reward increases. However, the further I go, there is also the possibility that I do not get filled on this trade. So what I try to do is find a balance between risk to reward, what catches my eye, and just getting into the trade. So if I was looking at this trade, what would I do? The first thing I would do is mark out my OTE, and then I am searching for a PD array around this area. What do I see in here? I have a fair value gap, and this is nested within this order block here. This also lines up with the box setup. So for my entry, I would personally be looking to enter the trade right here. My stop on this low, first partial here, and then looking for buy side liquidity up here. So letting this play out. That would be my partial. And then depending on if I move my stop to break even, it would have hit buy side liquidity here. For this next example, I'm looking at this range here. We're in a premium of that, as well as a premium of this placement range back down. And we have all these equal lows resting below. So let's dive into here. So here we are on the 5-minute chart, and if you want to pause and see what you see, go ahead and do that. First thing I notice is we have our buy side liquidity resting here that we were taken. We have a move up there and an aggressive move off of that. So if we're looking at this structure, we have a high, low, higher high. So then what I notice here is this breaker block. The next thing I notice is what is within that breaker block, and we have a fair value gap resting right here. So what I'd like to see is price return to this breaker block and at the most into this fair value gap. So looking at it, if I was just going to take the breaker block entry, it would look something like this. However, if I was going to narrow that down to the fair value gap, it would look something like this. Letting this play out. And if I was to partial and reach for those lows I talked about earlier, it would look something like this. And you can see we go and reach those lows. And just to review the checklist, we have a stop rate here, a market structure shift here, a return to a premium with PD arrays before moving away. For the next example, we are going to be looking at ES on the 1 minute chart. If you notice, we have a high resting right here. You can see we break this high, we close back in, and currently the body is respecting this level. Here is our stop rate. Here is our shift in structure. What am I looking for now? I'm looking for a PD array in an OTE or in a premium. Whenever this low is put in, if that is our low, I'm going to mark out the fib. And what do I have in this area right here? Well, I have a breaker block and a fair value gap. So letting this play out, price reaches up, fills that fair value gap, reaches up into an OTE before continuing lower. And my risk would look something like this. Now, if we go to the 5 minute and look at the exact same example, it is the same setup, but looks a little bit different. So if you notice here, we have this high or this high that was rated by the move up. We get an aggressive displacement down. This is our shift in structure. And then marking out our OTE, we reach back up into an OTE. What PD array do we have in this area? Well, we have an order block right here. And with that, my entry would be on this order block, targeting a new low, and my stop on the order block high. For this next example, we have NASDAQ on the 1 minute chart. If you notice, we did go a tick below this low, but I do not count that personally. But what happens? We get displacement up. Does this meet my criteria? No. I prefer to have a stop rate prior to the displacement. So I am not counting this as a displacement move up. See, price tends to be supporting there, then it drops lower. So marking out this low now, what happens? We get a move below this range and then back into the range. So aggressive down, aggressive up. This is the deviation from the range. And so accumulation, manipulation, I want to see distribution. So ideally I'm looking for a retest of this manipulation to then be reaching for the other side here before going higher. So let's see what happens. And if you notice how these candles are not closing below this old low. There we get a move higher, take partials, and let's see what happens. We have all this liquidity resting above. And there we go. And although we did not shift structure prior to this entry, this is a box setup entry. And I wanted to throw it in here just to show that without a lower time frame liquidity raid prior to a move, I am not interested in it. For this last example, I'm going to go from the daily down to the 5 minute. So if you notice here, the point of interest is this volume imbalance on ES. Going down to the hourly chart, we can see that there was a stop right here, a displacement move up. Marking out that displacement move with a fib, we are now reaching back into an equilibrium on the hourly. Going down to the 15-minute chart, here's that equilibrium. Here is sell-side liquidity. Let's see what happens. Get an aggressive move below sell side into the point of interest, and we get displacement back up. If you notice, we do have a fair value gap right here. However, does that meet all my criteria? It does not, because it is in a premium of the range. So from here, I will go down to the 5 minute. I'm going to get rid of the point of interest so we can see better. We have a fair value gap right here. And if we get rid of the area that is in a premium, looks like this. And from here, we have order block, fair value gap. So I would be looking to enter here, putting my stop on this order block low, partial or move my stop to break even here, target the initial highs from the morning, and from there, let runners run. So letting this play out. There's the entry, gets respected, and then we displace higher. Just to review everything, I look for a stop raid, a shift in structure, a return to equilibrium or OTE, some sort of PD array that catches my eye, and then manage my risk in order to have solid risk to reward. I hope you found this video beneficial. If you did, please consider liking and subscribing. I hope you have a great rest of your day. See ya.